Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 14th, 2025, and we're diving into AstroNova's fiscal 2025 fourth quarter and full-year financial results. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. AstroNova, a leader in data visualization technologies, has just released their latest earnings report, and there's a lot to unpack, from restructuring plans to their fiscal 2026 outlook.
Revenue and profitability overview. Let's start with the top line. AstroNova reported a net revenue of $37.4 million for the fourth quarter, which is a 5.6% decrease compared to last year. John, can you shed some light on this?
Absolutely. The decline in revenue is primarily due to lower sales in both the product identification and test and measurement segments. However, it's important to note that 71% of their fiscal 2025 revenue was recurring, which provides a stable income base. Despite the revenue dip, the company faced a net loss of $15.6 million this quarter, largely due to a significant goodwill impairment charge.
Operational efficiencies and future outlook. AstroNova is implementing several strategic initiatives. Can you tell us more about their restructuring and future outlook?
AstroNova is advancing its restructuring and operational realignment plans, which are expected to deliver $3 million in annualized savings. They're focusing on simplifying their product portfolio to emphasize higher growth and higher margin products. Looking ahead, they reaffirmed their fiscal 2026 revenue forecast of $160 million to $165 million, with an expected EBITDA margin expansion of 60 basis points.
Segment performance and challenges. How did AstroNova's segments perform, and what challenges did they face?
The product identification segment reported an operating loss of $11.2 million, impacted by a $13.4 million goodwill impairment related to their MTEX acquisition. The test and measurement segment saw a revenue decline to $11.7 million, affected by delayed defense orders and the Boeing strike. Despite these challenges, their order backlog remains strong at $28.3 million.
CEO strategic vision. What insights did CEO Greg Woods provide about AstroNova's strategic direction?
Greg Woods emphasized the company's focus on innovation to gain market share and expand their reach. They're leveraging MTEX technologies to enhance product quality and reliability, aiming for greater supply chain control to reduce costs and expand margins. Excitingly, they plan to launch new products with next-generation technology in the first quarter of fiscal 2026.
Key takeaways. In summary, AstroNova is navigating through challenges with strategic initiatives aimed at improving profitability and market position. Their fiscal 2025 revenue was $151.3 million, and they reported an adjusted EPS of 6 cents for Q4. With a focus on restructuring and product innovation, they forecast revenue growth for fiscal 2026. Thank you for joining us, John.
Thank you. It's been a pleasure discussing AstroNova's performance and future prospects.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe. We'd love to hear your thoughts on AstroNova's performance in the comments below.